Going on, guys? Good afternoon. It's your favorite mortgage lender, Abdel Guatmi. Happy Monday. Happy market update. What are we going to talk? We've got so much to cover this week. A lot of different changes that we have going on with the employment market. Happy 4th to everybody. We're going to dive into what were the expectations last week when we looked at some of the employment data, and then what's the expectations with us heading into this week with some of the different data readings that we've got. The first thing that we want to take a look at is when we talk about the employment market, what are the different various important information that we need to target, right? And we take a look at where farm payroll and household survey form has been coming into, right? So we're going to see the first thing we saw the JOLTS report, job openings and labor turnovers. What were the different fluctuations? How did the numbers transition and come in there? And let me tell you, the numbers came in a little wishy-washy, right? We saw a little over 206,000 jobs that were created, but the main thing that I want us to concentrate on is that the prior 2 months, there were revisions down of 111,000 jobs, or 111,000 jobs that were revision down. They shaved that off, which actually took the unemployment rate from 4% to 4.1%. Why is that so critical? The importance of that, seeing that slight change shows that inflation is obviously slowing down, but now we're also seeing that unemployment is on the rise. A lot of the different fluctuations also that I want us to concentrate on is that a lot of these jobs that are simultaneously being reported month over month is based on part-time jobs, part-time employment jobs that are obviously not as significant as the full-time jobs, right? Where we'll see two different types of surveys, right? We look at the household survey and the business survey. Business survey being estimates, that's usually the one that is generally off, and then there's revisions for. And then the household survey is a little bit more live numbers that we're starting to see. And we're actually seeing that there was only 116,000 jobs. Again, the expectation was over 200,000. So now if we shift also, we also take a look at private payroll, which usually comes out every Wednesday. And private payroll also is showing a little bit of a slight decline when we start seeing a little bit of fluctuation from the prior month. We only saw an increase of 150,000 private payroll jobs comparative to 160,000. So again, remember, this may sound like a bad thing, but this is what we need. This is exactly what we're looking to accomplish when we take a look at some of these data readings, because again, the less jobs that are out there, the more of a potential pivot that the Fed has to make when we start looking at these different fluctuations that are coming into place. Okay. And again, doing a deeper dive into it, annual change in private payroll, again, you're seeing a little bit of a change of a drop since March, where annual pay increases again was only at 4.9, which was previously to 5, and then job changes only 7.8. Again, the wage increases are at the lowest that they've been in really since 3 years, almost 2021, which is very interesting to see how that's going to fluctuate, because if cost of things go up, simultaneously wage growth and inflation needs to go up as well. Job openings, JOLTS report. That's very, very important. We want to take a look at how many jobs are out there that are being created. And once again, we're seeing that the quit rate also simultaneously hit a certain amount where it was at that 2.2%, which again is showing that people are a little bit afraid to get rid of their jobs once they have basically really made the decision, or once they have basically tested the market. They're not leaving their jobs. They're kind of staying put, right? And then the most important thing that we get weekly jobless claims every single week, right? And there's two parts in the jobless claims. We get the consistent initial jobless claims, which means you have essentially just been laid off and you're applying for unemployment. And then we get the continuing jobless claims. And that's the number that we really want to concentrate on, because it just reached over 1.8 million different people who are having a hard time finding a job continuously after they have gone and been laid off, right? And that's very critical, because that's the highest since November of 2021. And if people continue to obviously start seeing that, we should see the mandate for the Fed look to potentially shift and see some potential rate cuts, obviously with an opportunity that we want to kind of have that balance, right? Now, in addition to that, I know we've been seeing so much stuff on the media. Oh my God, home values are going down. That's not necessarily the case. The median home price may be going down, and that's just the difference between the most expensive home and the cheapest home, and the median between the two. Does not mean that home prices are on a decline. The other myth that I'm seeing out there that a lot of people are misconstruing is many homes are seeing price cuts. Listen, if a house has been sitting on the market for quite some time, chances are the real estate professional may have priced the home too high in the beginning, may have not necessarily put the necessary marketing tactics that need to, because let me tell you, the market is still extensively competitive. Home values are still significantly going above asking and appraising above asking. I'll add to that. So we are seeing a little bit of changes from that standpoint, but yes, some houses are seeing a little bit of slight cuts, and that's just truly because some of these real estate professionals are promising the world to some of these consumers, and then just unfortunately not being able to truly get what they need, which is causing price cuts or causing fluctuations within the market. So the other item that we wanted to touch base on is what's happening this week, right? This week was what I call the inflation data week. We're going to get updates in regards to CPI, Consumer Price Index. We wanted to consistently see a little bit of decline in spending. That's what we've been seeing. Consumers are tapped out, right? All-time credit card debts is at an all-time high. And then we're also seeing that the cost to make things from a wholesale inflation has also gone down as well, right? Once the cost of things going up, obviously the translation goes to the consumer side. But if it is necessarily cheaper for you as a consumer to obviously drop the cost of making things from a business perspective, it's going to simultaneously translate into the cost that is going to go into it with the consumer as well. Okay, so I'll keep you guys updated on that. The Fed chair will be coming out and speaking on Tuesday, so we'll see a little bit of an insight in regards to what they kind of give us when it comes to that stuff, and then we'll take it from there. The mortgage market over the last few really days have been on a slight decline trend, which is great. That's kind of what we've been seeing. Today really didn't yield us anything. But if we kind of see a little bit of a fluctuation, we were taking a little bit of a turn to the worse, but we've kind of rebounded and we're back on track. And I'm going to show this to you guys, and we want to see that green of what I say is important because, again, we went to almost as high as 7.14. We're a little bit of some of the unfriendly data that we expected. With some of the changes with the Fed and some of the changes when we saw a little bit of employment data. And now we're on that consistent downward trend. And I'll tell you guys, we have been pretty much teetering around that, okay? Going up and going down. If you really go back to essentially where we're at, basically in March, about 4 months ago, we are more or less right around the same amount that we were at that time frame. Kind of interesting to see a little bit of fluctuation, but, let's not forget also in October, where interest rates were, right? They were super high. They were creeping just shy or just hitting 8%. We are on that decline trend. We are seeing most of our clients. I just locked a client today, 6.625 on a condo. She's paying about a point, which is awesome. Some of our FHAs, we're seeing anything from the high fives to low sixes. FHA is always usually a little bit more competitive than conventional, really mainly just because of the guarantee with mortgage insurance premiums. But again, we're going to kind of see a little bit of that fluctuation. But this is kind of going back, guys, to what we've been monitoring. And if you see a little bit of a downward trend, we're slowly creeping to that, and that's kind of what we're really looking to accomplish. Okay. As always, I'll keep you guys updated. Keep an eye out for some of our short form videos as we continue seeing progress within the next updated market data, and then we'll take it from there. Talk to you guys soon.